Good morning, everybody. Welcome to another Daily Market brought to you by Mike Bjork. Today is Thursday, and it's October 20th. We got a couple items here to go over, and we'll start off with the weekly jobless claims. So last week, and this has been kind of going on for the last couple of weeks, or about a month, we've been in the 240 range. So last week was 247,000 people applying for unemployment. Forecast supposed to be in that same range at 248, and they did get a bit of a spike at 260,000 people, which was the previous range we were kind of receiving here. We'll kind of see if this is a trend or not. I expect this to come down, especially with the holidays coming up here, and typically jobs get filled for seasonal jobs for the holiday season. I think Amazon announced at one point they're going to hire 120,000 people, so I'm sure that's going to shrink for a temporary time period. Also on the docket, we got the Philly Fed. This is the manufacturing numbers out of the Philadelphia region. Last month it was a good number. We had 12.8 back in September. The forecast is supposed to dip down to 7.0, but it beat expectations at 9.7, even though it did dip, but not as far as we anticipated. So, okay number there. Still 9.7 is still a decent number, especially coming into the fall, for manufacturing. And it's, again, a positive, which is always a plus. On the other hand, we got the existing home sales. We had the We had those other ones earlier in the week, which were not so good. But today, as you can see, we had a nice little surprise here. We had the new home sales weren't looking so good, but existing home sales shows improvement here. We had 5.33 million in August. Forecast was supposed to pull back a little bit at 5.31, and it actually went up to 5.47. So new home sales was kind of down, as we saw earlier this week, but existing home sales was up, which is obviously a very good sign here. Leading indicators. Going from negative here in August up to a positive 0.2%. So good numbers right there. So not bad numbers, even though Philly Fed went down a little bit, weekly jobless claims went up. But, these aren't make or break numbers here. So these aren't going to kill us or anything. But overall, decent numbers as far as I'm concerned here. Stock market's down. Excuse me about that. The stock market's down. It was a little mixed bag of news. Part of it was some comments made by ECB's Draghi. He basically left their rates unchanged and didn't comment about any further tapering or anything about the the QE over there. So because there's nothing mentioned, the stock, the euro went down and the dollar got strong against the euro in this scenario here. Comments last night by Fed Studley. He's definitely a voting member. The New York Fed governor always has a voting seat, and basically said that if the economy is at the same trajectory, keeps continuing on the same trajectory, that he anticipates a rate hike at the end of this year. So that's by an important person right there, voting member, and he's basically the number 2 person behind Janet Yellen on the Fed board there. So let's take a look here at what the bond market's doing. And as you can see here, we're getting a nice little improvement here. We're starting to get a trend upwards, which is a positive sign here. So we did break above the 10-day moving average yesterday. We did start above that on the 10-day moving average. But we're going to be up against the 100-day moving average. This might be a little tougher to break than what the 10-day was that we saw, because it's been a long time since we been below the 100-day moving average. And this could be kind of a tougher ceiling to break above. As we can see, we were pretty much close to it earlier today and pulled back a bit. So we'll kind of wait and see. But right now, I would advise kind of, since we broke above the 10-day, wait a little bit and see if we can get better pricing ahead. See if we can maybe break above that over the next couple of days here. All right, folks, you guys have a great day. Pricing is about the same as where we left off yesterday. We're only about 3 basis points higher than where we left off yesterday. Even though the stock market's down, a lot of that money is kind of going into the treasuries. But overall, not bad start here for the bond market and the interest rates here. Also, if you guys want to get updates throughout the day, just go ahead and follow me at Mike Bjork on Twitter. I do post throughout the day different events that are popping up or different, where the market's going. So if you want to follow throughout the day, check me out at Mike Bjork on Twitter. Have a great day, guys. See you guys tomorrow. Thanks for watching. Bye-bye.